Good afternoon, everyone, from the IBD Newsroom. Welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to take a look at earnings reports from Pinterest and Fortinet. Also take a look at EPAM ahead of its earnings report next week, and also TradeWeb, which is also set to report earnings next week. First, let's take a look at the markets today. It looks like we had the Nasdaq down about 1.3%. S&P 500 down a little less than that. Dow held up pretty well at last check, now maybe 0.3%, 0.4%. But let's take a look at a chart of the Nasdaq, Justin, because we can see it is testing a key support level here.
Yeah, it seems strange that just last week on Friday we were talking about the indexes at new highs, and now the whole kind of scenario has changed. This is definitely a pullback. We are down at the 50-day moving average line now. Headlines really drove this pullback, starting with the Fed announcement that was not quite what Wall Street wanted. Mm-hmm. And then following that up, Trump had to tweet a little bit about tariffs. Yep. So a lot of headlines.
A lot of headlines. We also had a jobs report today that mostly came in line with expectations. But bottom line, another sharp day of selling on the Nasdaq. We did have two distribution days on Wednesday and Thursday for the Nasdaq, and possibly another one taking shape today. We'll see what the volume looks like.
But, yeah, whenever you get that back-to-back distribution or a cluster of distribution, that's something that you really need to pay attention to, because that can really kill the market, at least on a short-term basis. Then you kind of need to have some sideways action and a little bit of a recovery before you can move forward again.
Got it. All right, let's take a look at some individual growth stocks today. First of all, a bright spot in the market. New issue, Pinterest had a really solid earnings report today. Nice gap up for the stock. We'll be taking a look at a daily chart for Pinterest here. It did close off its session highs, but a pretty solid day for the stock. And is this a breakout or not quite? How are we looking at Pinterest here?
Well, this is the first base that Pinterest has had since its IPO, which was just recently. And this is not profitable yet, but it's on the verge of profitability. They were just off 6 cents below, the zero on the EPS. So what's more important is that they have really strong sales. The strong sales have been double-digit revenue growth going back the last few quarters, and it's not a small number. They're over 200 million in revenue, so per quarter. So it's not like it's going off of small numbers. But yeah, this is looking like it could be approaching those old highs that it did shortly after its IPO, and that makes it look really interesting.
Yeah, the metrics at Pinterest still look pretty good. Active monthly users up to 300 million in the quarter. That was up 30% from a year ago, and as Justin mentioned, another quarter of booming sales growth. All right, moving on, let's take a look at EPAM Systems. This is formerly a leaderboard stock. They report earnings next week, but we used a strategy here. This was a stock that is still actually holding above a buy point, but we're a little defensive today. Decided to lock in a little bit of a gain for EPAM Systems, and probably not a bad strategy for growth investors in general. If you've got a decent gain on a stock right now, don't be afraid to take profits when you're seeing a market under distribution.
Yeah, when you see the pullback here in the markets, it doesn't mean that you have to go run for the bunkers and buy canned goods, but there's definitely a thing that you should do with your portfolio in terms of looking at opportunities for taking profits and cutting losses a little bit quicker. And that was the case with EPAM. We put this on leaderboard back in early July 8th. So we had a little bit of a gain. We had a 10% gain on this that was starting to come in on us. So rather than let this go negative, or rather than holding it through earnings next week without much of a cushion, it just seemed much more prudent to take the profits while we have them.
Yeah, and definitely a stock that hasn't broken down yet. I think
not at all.
Six straight declines or 5 straight declines, it looks like, but still holding above the 50-day moving average. So we'll see what numbers look like next week for EPAM. Okay, also Fortinet, a really strong breakout, looked good for a while this morning.
Yeah.
Another security software stock on the move, but gains faded pretty badly for Fortinet.
And this is where it can be really important to kind of look at that first hour high. A lot of times what we'll do is we'll take a look at how it trades in the first few minutes, the first half hour, and the first hour. And in this case, about 40 minutes into the trading session, Fortinet was at its highs and it never saw those highs again. So if you waited a little bit and just to see how this played out, you could have potentially avoided a big downturn here. Now, if we are buying things off of breakaway gaps, we're usually trying to get as close to that open price as possible. Sometimes that's not quite possible if it keeps on running and well beyond the first few hours. But in this case, especially with the market as weak as it was, you have to be a little bit more careful. And so using that first hour high could have saved you from a potential downturn on this one.
Yeah, it should also be noted that Fortinet definitely not the leader in the security software group. There's been a lot of stocks that broke out a long time ago.
Right.
CyberArk and Zscaler come to mind. Even CrowdStrike we've talked about, a new issue. Another one of these new issues that's not profitable yet but shows big sales growth regarding CrowdStrike. But so gains fade for Fortinet. Pretty good quarter. Good fundamentals here, but kind of a disappointing breakout by the close.
And that's a key point that the cybersecurity was one of the leading industry groups of this whole move since January, really the entire year here. And it was a leading group from before, too. So whenever you're looking at that leading group, you definitely want the leading stocks in the group.
All right, well, finally, let's throw in an extra stock here. Take a look at TradeWeb Markets. We're going to see earnings from them next week, I believe Thursday before the open. This is a company that operates a fixed income derivatives ETF trading platform for institutional investors and even retail investors for that matter. But credit to TradeWeb today for a nice bounce off the 50-day moving average. Looks like it closed above a recent buy point. So this is a stock that's actually acting pretty well ahead of earnings.
Yeah, and one of the things that I like about some of these setups with a reversal or a bounce off the 50-day moving average is it does help you kind of with a line in the sand. So if it does cross below that, you kind of know, look, this rally is maybe needing a little bit more time, or it's potentially in trouble. So it definitely does kind of set up a risk percentage for you that can be a lot less than our 7 to 8% risk percentage.
Okay, well, thanks very much for that insight, Justin. Just a couple of house cleaning items. Don't forget to check out the latest podcast with Irusha Paris, Investing with IBD. That is available right now, so be sure to subscribe for free to the podcast. For details, just go to investors.com/podcast. And as always, just a reminder that we are available on multiple social media outlets. Be sure to check us out on Facebook, Instagram, YouTube, and Twitter. All right, rough week for the stock market. Hopefully a little better next week. We'll see how that plays out, but hope you all have a great weekend. And I know Justin and Ed will be back here on Monday. And until then, have a great weekend.